Hi everybody, Tim Knight. Okay, got a lot of symbols here. I could talk for hours, but I won't. Let's do what we can in the 15 minutes that we've got. The market continues to plunge, and that's cool. We're certainly in a bear market now. There's no doubt about that. No doubt at all. What I'm hoping for at some point is what I would refer to as a wave 4 recovery. There was a rumor earlier today that spiked the market briefly that, tariffs are going to be suspended for 90 days, but that was not true. But that's the kind of silliness that I'd love to see, because there's no way I'm going to be scurrying around buying puts at these levels. I have hung on to a portion of my puts. I track everything I trade. I can tell you every single put I've sold in the past 4 months is more than doubled in price. So a little bit of money left on the table there, but those that I have held on to are very profitable, and I have every belief they might diminish in value to some degree, but they're long-term puts, and I expect them to ultimately be worth a lot more. But yeah, we need some kind of salvation, some kind of announcement, something to make shorting great again. I came into the day real light on the short side, which wasn't great. And I did have a couple of 3 precious metals longs, profitable silver, profitable Newmont mines, small loss on gold. But this is a very complicated market to trade and requires a lot of juggling. I've got 4 different accounts I'm trading as well. So it's quite the eye-crossing exercise. But it is a bear market. We're going to have a lot of fun in the months ahead. It just requires a lot of skill and a lot of time. And I try to spend the time in your behalf to smoke out the charts. So let's go in warp 8. Here's the spider. We got very close to a very long-term support channel. My hope is that we may bounce as high as here on the spider, or even as high as here if some crazy news comes out. We've got the CPI on Thursday morning. Of course, earnings seasons will start to heat up next week. And of course, this tariff stuff has just thrown the world into complete turmoil. Where the VIX was over 60 this morning, I believe, before the market opened. IWM, target nailed. This was the target. I shared it with you. I thought it was ridiculous, and it worked. We actually got down this far and then some. Got a little bit below it. 174.75 has been achieved. Simple measured move, and it worked. Yay. Here's the XLU. This has also worked great. Watch the archives. That's 30 days. Try to find anything that hasn't gone our way. It's been great. XLU diamond pattern is completed. We've cracked way below it. I expect a grinding bear market, a complete shift in political polarization, and vastly lower prices ahead. But it would help if we get some kind of bounce so we can get juicy again. XOP, that heartbreaker. This one, you may recall, I was shorting, never worked out, gave up here, and then the bottom fell out, and it's completely collapsed. I actually bought some of this late on Friday, dumped it this morning for a loss, and it went way down here. It may well bounce up to, say, here. And if we start to get a rally, things like XOP and XLB will probably be quite lusty in their ascent. But I'm not touching this till we, possibly get back to this gap, which would make it appealing again. XLB, another good call there. This one cracked its diamond pattern, went absolutely crashing lower. Believe me, I was wringing my hands Sunday, waiting for the futures to open. And it was quite the sight. NQ down quadruple digits, YM down into the 30, with a 3 as the leading digit. When we could lose like 7,000 or 8,000 points on the Dow, certainly 7,000. And it was only last month. Everyone was assuring, that everything was going to be great. Wall Street analysts are useless. Know that. That's God's honest truth. Page shills, nothing more. You want your truth, you come here. EFA, this one, got all the way down here. I've bought some of this, maybe a dead cat bounce trade. It has gotten completely creamed. This was one of the best calls ever. It was all about this gap. We talked about it here in terms of the risk-reward ratio, just pennies of risk, gobs of profit opportunity. This has completely gotten slaughtered in one of the most massive wipeouts in the history of the financial markets. Absolutely cataclysmic. So that worked out. Haven't heard from anybody, so I guess nobody traded that. Gold is weak. I guess this was some kind of safe haven trade or something. It actually was fighting back. It was the only green on the screen most of last night and into this morning. I didn't like the looks of it early on because that modest pop higher withered away, and I'm like, okay, I'm out. So as I said, I got out of gold, silver, and NEM. One small loss and two profitable. Newmont Mines worked out well. Silver, God bless it, still green, SLB. It has gotten shellacked over the past few days. We've been hammered down to a much more appealing price where there's some level of support. And as I said, NEM, I'd gone along that. That's still up, even with all the selling of gold, and may have more uppity to go. It's holding nicely. So the fact it could be up on a day like this is pretty extraordinary. All along, I've talked about the importance of watching crypto. It was weirdly robust on Friday. Didn't really get hit too hard. And, I tipped my hat to the crypto bros and said, well, it's pretty impressive on Friday. That kind of held its own. That didn't hold either. This weekend, it started to melt. It is somewhat off the lows. And here is key support, around about $73,500. Break that, and it's a whole new era of Michael Saylordom. As it is now, it is showing stability above that level. Ethereum, hard fall. They were, you remember the preposterous price projections on this, 10,000, 50,000, 100,000. No, it's just withering away. And and then XRP, which I was pretty adamant about it falling away from its timing pattern, it's red too, and not nearly as much as Ethereum. But this ascent right here was very, very rapid, and I would not be surprised at all to see that ascent just get nuked. Strategy, it's a great new name, Strategy, is off almost 8%. They are utterly at the mercy of whatever Bitcoin does. And, ultimately, this could be one of the great financial catastrophes in corporate history. Isn't there yet? We'll see. But they are at the mercy of people's interest in crypto, which, given the amount of support the federal government and the political heads have shown to crypto, and the whole world has gone like, don't get your hopes up. But, like I say, a lot of stocks which were delicious to short when prices were absolutely preposterous. And I bored you to tears about how overvalued things were and how we were at historic, absurd valuations. That boat's kind of sailed. We've seen wipeouts of 50, 60, 70, 80, 90, 95% already. Things like AMD have crashed from 227 down to the double digits. So, less than half wipeouts of greater than 50% are a dime a dozen these days. Not just weird biotech startups, but major household names, major multi-decade old public companies. And I ain't going near this with any short ideas. It's got to get a lot higher to be interesting again. Broadcom, another example, just a cataclysm here, going from 250 down to, this one's great. It hasn't quite lost half of its value yet, so that's a blue chip these days. But the semiconductor index, gone are the days of Jensen Huang worship. Now it's about, this is AI thing going to completely get obliterated or what? So the SOX has been catastrophic, and up here, what we want to see is a recovery to this kind of level. There isn't a huge, massive overhead supply until way up here. I cannot imagine a world in which we get back to there. Maybe get back here, which I would love, with some sort of Powell bends over and does a breakout or something like that, or a bailout, what have you. But the kinds of drops we've seen on the kinds of charts I've been sharing for a long time, there's just too many examples to go through. I stayed up very late last night looking at well over 1,000 different charts, and it's kind of boring after a while. It's just plunge after plunge after plunge, plunge, plunge. There's very little worth buying. You've seen this with NBR. This was an analog we talked about. CC is just round the top after round the top. You've got diamond patterns like Dow. Again, major, ancient household names, corporations that constitute the backbone of American industry getting destroyed. But yeah, that's Dow, Dow Chemical. Look at that. It looks like it looks like a fraud almost. I'm not saying that it is at all, but I'm just saying this is the kind of explosion that would happen with the CFO's left and they're auditing the past 10 years. And it's just, this is the global financial and trade system unraveling in front of our eyes. ALB, remember this one? I talked about a target of this trend line. Well, that got hit. Didn't even stop there. Remember this dome right here? Down we go and plunging so hard it's below the trend line. Cleveland Cliffs, you're getting the idea. Every single chart. Like I said earlier, I don't know if I said earlier, I've got a lot of different audiences, but I think I told you minutes ago, yeah, every single option I'm closed, on average, up 103%. Some are up 300%, some are up 75%. Average them all out, and there are hundreds of them, low triple digits. And airlines too. Here's Delta Airlines. Look at this. We have a breakout, whoosh, up it goes, and it gets to about 70, down 50%. United Airlines, same idea. Whoosh, up it goes, peaks up here. Just, earlier this year, 116, not even 60 now. So it's really eye-popping stuff. But the kinds of things that look appealing later, but not now, on the short side are things like, say, Apple. So, we zoom in here and we've seen this kind of break down. And this was kind of the last gasp over here. Plunge, plunge, and mega plunge. There's the gap way down there. We're just about to close. I ain't going near this with a 10-foot pole. If for whatever reason we rallied, especially for whatever reason, and how many months it'll take, who knows, it got up to say here again. It'd be very interesting. But it's also like catching a falling knife when you just go and say, well, gee, Apple's cheap. I'd go up and buy it. May not work out. Amazon, same idea, although Amazon's much closer to being interesting than Apple is. To my eyes, this gap right here is a pretty interesting point to get bearish. So it wouldn't take that much. Like one good day tomorrow would do the trick. And then Mark Zuckerberg's company Meta, we zoom in here. And it's kind of in between those two. It would take a rally to around this gap. So the last blob of charts are sort of ratio charts. You've seen some of these before, but they kind of drive from the same point. It's gold versus the S&P. You can see gold doing tremendously well against equities. Here's our all-world index divided by gold. Finally completed the pattern. You and I have been waiting for months for this. The pattern is done. This sucker's going down. And so what does it mean? Lower equities, higher gold, or both? Here's the Russell 2000 divided by silver. Same idea. We've got a diamond pattern that's complete. Same conclusion. Silver divided by gold, that silver-gold ratio. Plunging, showing that today notwithstanding, silver's been very, very weak versus gold. And a little favorite, very simple, the spider divided by the TLT. That is to say, equities divided by bonds. This wedge pattern has been in place for half a decade. It failed in just last month. And so it failed, retraced, and this is beautiful. I mean, look at this. This is a ratio chart. It's acting just like an individual item. It's like magic. Retraced right up to the broken trend line and then bombs away. Amazing stuff. So we are in a bear market. It's going to be a long bear market. There's going to be lots of ups and downs. It's tough stuff, but I hope I can be of service to you and help out with some of these